Okay, Happy New Year, everyone. Gott Natur. It's nice to be here. I thought there's a lot going on in our industry. There's a lot going on with our customers, and there's definitely a lot going on at TK. And so I wanted to come and hold the town hall together with Kenneth and talk about what's going on. So you heard it from the horse's mouth. There's a lot of stuff you hear on Yammer. As a global organization, I think we're very good at communicating electronically, but I'm an old school type of guy. I like to come out and hear people, and I think it's a good chance for you also to ask questions about what's going on, because there is so much. So it is my plan to go around to many offices as I can in early 2016 and talk to them, but we're having a video shot of it, so where I can't go, people can still get the benefit of it. And I think that's far more important than getting all the leadership together, that everybody can hear what's going on at TK, and that's just representative of how we work together. So that's TK, that's how we kick off 2016. So how is the business looking? Well, here in Trondheim, you live and breathe oil much more than some of our other areas, so you know that pretty well. But I would say when you look at TK as a whole, we're doing really well. We have about $1.3 to $1.4 billion of cash flow, and that's tremendous. That's totally different from what we had in the financial crisis, when, like our customers who have suffered 50 to 70% drops in revenue as the oil price has gone down, we were much more exposed to tankers. Now, of course, tankers are, after 6 long years, up at their 8-year highs, and we're making a lot of money there. But the big part is the cash flows. And so I'm very optimistic that the oil price will come back. I can't tell you exactly when, but I know that it will. And people say to me, well, what's the difference between an optimist and a pessimist? Well, a pessimist is somebody who will always find difficulty in some opportunity. But an optimist will always find opportunity in a difficulty. And we are definitely in a difficulty now. And I can see the optimistic side that TK, as we did with our acquisition of Savan, as we've done with other things, we will pivot back and we will counterattack at the appropriate time. But right now we're playing defense as it goes forward. And so let's look at the positives as it relates to TK Offshore. TK Offshore has, in its 2016 budget, about $700 million of cash flow, of which half comes roughly here from Trondheim, 360 million. So that's a great base. That's roughly 50% of TK's 1.3 to 1.4 billion. That's a great base to build on. The other positive is the strengthening US dollar. That's good because we have Norwegian kroner costs, we have Canadian dollar costs, we have real costs. All of that helps. It's not so much of a play, but that every little bit helps, and that definitely is helping us. The third is the most important part. That is to say, we're inside customers' logistics chain. All of you see what's happening on the drilling rig side. And as I said to the previous group, for the last 8 to 10 years, I've had drilling rig envy, because the drilling rigs were making so much money. On our stable contract base, we weren't making so much money. As I say to people, I don't recall people giving us more money at $100 oil, so why do we have to give less money now that it's $30 or $40? But the reality of it is that we're now in a situation where we're getting paid. The customers need us, because without us they don't get cash flow. So maybe we were like on the Itajaí FPSO, we were $3 and the customer used to get $47 at $50 oil. Today we get $3 and maybe Petrobras gets $27. But in any case, we're still relevant and they need us for the cash flow. And that's the most important thing, as Kenneth will spend more time talking about, that we stay relevant with our customers, both in terms of producing cash flow for them as well as being cost effective. And then what we did over in late December, which is when we decided to reduce the distributions by holding more reserves back for growth. We are no longer reliant on raising capital. We instead are going to use the net cash flow, which is about $280 million in 2016, to use that to fund our projects. That's Gina Krog, that's the Atlanta project, that's Libra. as well as a host of other projects. So we have great profitable projects, but we have to be able to finance them. So a lot of people have sent me emails, called me up, and when I meet them, they say, why did we reduce the distributions? Which of course had a very negative effect on the share price. And that was because the cost of money became rather high. If you look at these slides, you'll see that TK Offshore in mid-December was 28.7%. Now think about that. We have booked the Libra, we've booked at Atlanta. These are good deals, but they don't have a return on equity of 28%. So we have all these good projects, and then at the same time, if we were to raise money at these exorbitant rates, it would have turned out to be a dilutive project. We'd lose money. So you can't do that. But the same situation was also on the LNG side. And think about our customers. Our customers are bringing fields on that they're going to lose money on. And that's why they're taking write-downs. We are part of an Australian LNG project. It's got a break even for our customer of $13, and today the price is $6.50. So we have to keep in mind that this is something that's happening to all of our customers. We're relatively insulated, but that you're only as healthy as your customers. So in the first instance, the pricing was outrageous. That didn't work. But there's a second reason, and that is that the capacity, the amount of investors willing to invest in energy, that wasn't there either. In other words, that had evaporated. This is an article from the FT, but you'll see that in the second half, U.S. oil companies only raised $3 billion in the second half, down from $15 billion in the first half. And that shows you that investors have departed. In the good old days, which was a year ago, Vince Locke, our CFO, he would call up the investment banks and tell them he wanted to raise money at 4 o'clock, and then at 5:10, 70 minutes later, he'd have $300 million in sizes of $50,000 to $100,000. Think how many 50 to 100,000 people would sign up for that. But that's how good it was. That isn't there today. And I learned that when we tried to do the CNAR. Well, we did the CNAR, but we did it in a different way. And then when we raised some money up at TK Corporation with high yield bond, I had understood that the investors had left the party. So when the investors have left the party, and when the ones that are there are charging exorbitant rates, what do? Well, you change the game. And this is a noted economist, like all good economists, he's dead now. But when the facts change, I change my mind. What do, sir? The worst thing you can do is not to respond to the environment you have. But it was a difficult discussion to have because we were sitting in the same position in 2008, 2009, and we didn't change the distributions, but that was fundamentally different, which is what I'll argue later. So when the board met in December, they asked, we made a presentation to them, and we weighed up the pros and cons of cutting the distribution. Clearly, by TK Offshore pays out approximately $225 million today. And with the growth we see with Atlanta and all that, it would be about $280 million. So could we use that $280 million rather than paying it out to people? Could we instead just use that for the growth projects? And the answer is, of course, yes. But I just want you to note that the MLP model has served us very well. TK has been able to grow from $2 billion to close to $12 to $13 billion in a decade. We've raised over $4 billion of equity. We could never have grown as fast as we have grown, both here in Trondheim, in our LNG in Stavanger, if we didn't have the MLPs. So you don't change just for the sake of it. But as I just showed you, it avoided dilutive equity issuances. The unit price will ultimately recover, I think. It'll be a function of when oil prices come back. But we improve our sustainability, and we will ultimately improve our ability to access bond and preferred bond markets. But as you've seen, we've lost our access to equity markets. We have to live off of our own cash flow. And as we've also seen, the unit price has dropped even further as the income dividend investors exit and value waits to come in. And then, of course, we can't grow as fast as we once did. I think that's okay because the industry isn't going to grow as fast given where the oil price is. The other part that the board considered was in looking at our current position. As I just showed you, our assets are still generating strong cash flows. That's great news. But the important thing is TK Offshore has now become so big, as I like to say, the daughter has grown up, that we achieved size and scale that we could finance our growth internally. That's that $250, $280 million that we can recycle. When we started TK Offshore, it was a smaller company. And we have this great growth pipeline thanks to all of you. On the FPSO side, we also have shuttles, we also have FSOs. The coverage ratios are relatively stable. And the most important thing, we have a strong organization filled with talent, a lot of which is in this room. And that's the most important thing, is that we need to be a sustainable organization. It isn't just what your balance sheet is. It's far more important that you have motivated people who can continue to move the organization and grow the organization. And I'm fundamentally sure that we now have a financial capacity to do that. And the bad that the board looked at, the dislocation of the capital markets. You know, I would go out 12 months ago and investors would say, I need another FPSO, Peter. Haven't you got one? Haven't you got? Now they're like, could you get rid of that FPSO, that Libra? Could you drop it? I'm like, no, it doesn't work that way. You know, customers, it doesn't work that way. But now they want stability. They don't want growth. Now we have to reduce our leverage down, which is consistent when you have a low oil price. That's also true of our customers, but they're not listening. You probably saw today the government's getting involved with whether Statoil should reduce their dividend, right? Because all oil companies are budgeted to $50 to $60 oil, and they're hemorrhaging whatever, you take whatever number you want, but it starts with a B for billions, right? Shell wants to take over BG, and they say we need $60 oil to make it work. Well, that's a tough argument. They have a big shareholder vote coming up. But the future growth is uncertain on the bad side. Some assets may be more challenging, like, for example, Vard. If it comes off contract, it'll probably be 2 more years before we get reemployment. And then, of course, there's a trend toward shorter contract duration. MLPs tend to like longer-term assets. So this was what the board took into account in making their decision. But now they made their decision, and now we have to live with the decision, and that will mean that in 2016, we're now looking at the distributable cash flow after we pay principal and interest. We can now pay off the bond that TK Offshore has in 2018 in the Norwegian krone bond market. And we'll have excess cash flow for funding projects. And it looks better in 17 and even better in 18. But this gives us the optionality to have growth as well as restore distributions. And when we restore distributions, we probably will do it with greater buffers or stronger coverage ratios. But then by doing that, TK's share price will recover. Did it go down when we reduced the distributions? Absolutely. But it'll go up again when we restore the distribution. So if we do all the things I'll talk about, which is delivering our projects, keeping them on with high utilization, then of course we'll be able to re-earn our investors' trust again. And that's important. And TK Corporation wants that to happen as well, because they're a big shareholder in TK Offshore. So I was told that people in Norway didn't understand pivot, the word pivot, because they didn't have basketball. But I said, but these people have handball. So they must understand pivot, because you can't dribble. So we're showing you a picture of pivot, but whether it's handball or basketball, what we're talking about here is that we're going to pivot on our strategy. The 2020 strategy remains in place, and that is to have $20 billion of profitable projects and assets by 2020. But we're going to pivot and do it a little differently. So as in handball, the goal is the same, but how we achieve the goal will be a little bit different in how we look at it. And so if 2015 was about the new normal and about coming to grips and adapting to the new normal, which we now see lasting longer, 2016 is going to be the year of the pivot. We're going to pivot from growth to efficiency. Chris Brett is already leading that here in Trondheim. It's going to be something that we're going to do throughout the organization, and that's what the customers want. When I go out and talk to customers, I talk to a head of an upstream major oil company. He thinks he can take 25% out of his upstream costs in the UK sector of the North Sea. And I said, ambitious? And he thinks it's doable. Okay, he's going to have to do a lot of changing, but they're talking about reducing manning. It has to be manning. And obviously changeovers. But this is what people are talking about, and we have to be a big part of it. We have to pivot, as you've already seen us done, from relying on outside capital to fund our growth to internally generate cash flow. And then, as Kenneth will talk about, we're pivoting from much more functional leadership to shared leadership. And then, what I'll talk about in a minute, pivoting from individual performance to much more team performance. And I think that's consistent, as I'll talk about, with TK's values. But some things never change. Our focus on safety and operations, which are the cornerstone of every TK franchise, and the TK brand, that should never change. And that's the most important thing. That's why the customers want TK to own and operate. And that's what we have to preserve in all of this. So there's certain no-go zones as we see them. So, reaching back, these are the 2020 strategy is the same, but we have 5 goals that are relevant for all of TK. The first is, we're already on, building liquidity at the MLPs to ensure their survival in weak capital markets. The second, which you guys are on, but we have to do a better job, execute on the existing growth pipeline on time and budget. I congratulate you again. As I said in my Yammer post, the deal of the year, or the moment of the year for me, was getting the Knarr on contract, but it did cost us $200 million more. And that's something that is built into the capitalized cost, we'll pay for the entire contract. Efficiency, Kenneth will talk more about this as it relates to offshore, but this is how we preserve our franchise with the customers, increasing our relevance to customers, reducing costs and finding efficiencies. And you have the EOI project. This is what's going to happen. As I say to people, we have a saying in America, don't let a good crisis go to waste. And I assure you, our customers, the oil companies, are not going to let this crisis go to waste. They're going to stay on it. Why? Because they're laying off 10% of their staff, right? I say to people, what's the difference between recession and depression? Recession is when your neighbor loses his job. Depression is when you lose your job. And these oil companies are feeling depressed. And they should, because 1 out of 10 of them at Chevron doesn't have a job anymore. So I make it into a little humor, but it's deadly serious. These are people's lives. And then what I'll talk about in a minute, engagement. We have to keep up the high employment, performance, motivation, and commitment. In other words, the TK spirit. And then finally, this pivot, focusing much more on efficiency and downplaying growth. And as we'll talk about, we're also seeking alternative sources of capital, which I think we're going to have, because we can't rely on the MLP market in the same way that we could. In the good old days, and you can see this from bond pricing, if a manufacturing company could issue a bond at 7%, a double B company, an energy company would issue that at 5.5 and 6. Today, that manufacturing company issues at 7, and the energy company, if they can issue, is at 10 to 12%. So that tells you that energy went quickly out of fashion. And what you're hearing me say, and what the board decided was, this is going to last for a while. So we better seek an alternative source of capital. We did that with the MLPs 10 years ago. I'm confident that Vince and his crew will do it again. So just in case you didn't understand the pivot, we took a few slides from the Friends comedy, where they're trying to move a couch up some apartment stairs. Turn, turn, turn. I don't think we can turn anymore. I don't think it's going to fit. Pivot, pivot, pivot. Shut up, shut up. Don't say that to me. Okay, I don't think it's going to pivot anymore, you think? So it isn't as easy as handball, but it isn't as hard as putting a couch up the stairs, put it that way. And, you know, if this had been a safety case, of course, they would have had an elevator put in. We all know that. So that's where we are. Now I want to talk, the second part, I want to talk about a new initiative we have, which you've already seen in some of the Yammer, which is talk about the TK spirit. And we have a tremendous culture here at TK, and it's exemplified in the TK spirit. But what I think we have to do is we have to have a greater focus on it. The board has encouraged us to do this, and I think we should celebrate the great TK spirit that we have. It's underpinned by our values, but it's also underpinned by all the other things we do. Our helping the community, helping each other, getting the respect from our customers and suppliers. And so we're going to have a big campaign to really celebrate this and have better definition of it. But I see TK spirit on units, and I was just telling people that I saw it this week with the band, that people do the right thing, and so what we're seeing with fixing things and going the extra mile, that's the true TK spirit. And that's why we work better together than we do individually, which is my next point, which is what I posted on Yammer, which is how we think about the short-term incentive program. We're looking at changing that to take out the individual performance factor. Why? Because we succeed or because we rise or we fall, succeed or fail together. And all of you can understand this, because when you go into your individual performance view, whether you're me who is getting it from the board or whether I'm giving it to someone who reports to me, everyone always is concerned about the number, right? Because that's what you think about. So let's take that out. Why don't we say to people, we know you're going to do the right thing, because that's part of the TK spirit. And why don't we be judged by how the company does and how we work as a team? And so I think that's how we're going to meet our goals in 2016, by working together, and we're stronger together. And so that's going to be part of it. You've been on a separate program here in Trondheim. We're now putting that together, as Kenneth will talk about, and I'm very pleased with that. We're reorganizing, and we're bringing everybody's incentive program to be working underneath offshore gas tankers, or if you support that, then you get, as Vancouver does, supporting all three, then you are part of that. And I think we will become a better company when we do that. And that's why I say when times get tough, people do the right thing. And that's the true TK spirit that I see exemplified, and I see so many examples of that. So, when you're planning 2016, keep in mind we're stronger as one team, one company, and to reinforce this, we're going to continue with the corporate performance factor. But in addition, we're going to have our business model aligned to the daughters, and we're going to have a team performance factor as well. And this will come out of the TOO goals, which Kenneth will talk about in a minute. And so you have to focus on how you individually and how your team can be part of meeting these goals. And then we are still going to have an individual performance factor, but we're going to take that out of the short-term incentive. Instead, you can work on your goals in a more qualitative way rather than on a quantitative way. And I can personally say that's going to make a much better discussion. And I just want to give a shout out to Hvid. She's trialed this successfully in Stavanger, and I think it's been a big boost to the organization. So now we're going to roll it out for all of TK, and I couldn't be more excited about that. How we work together, how we succeed, how we get extra performance has to be all aligned up. Kenneth, let me give it over to you.
Thanks, Peter. So I was sitting there thinking if what I did at midnight at New Year's Eve was really pivoting into the new year. I'm not sure quite, but Happy New Year, everyone. I sent out a New Year's message on Yammer, and I talked about the highlights of the year, and many of them TO was featured in, and I think we should all be proud of that. We accomplished a lot in 2015. I also referred to the Raspberry Awards, which are some of the lowlights we had in the year. And I actually think the biggest lowlights we had were really in the macro environment, and that's really what's setting the tone for what Peter's talking about, the new normal, the need to adjust our goals for 2016. And the three lowlights that we for sure are carrying into the new year is first and foremost the low oil price. When we started working on our 2016 goals, we were, I still think, hoping at least that we wouldn't see the very low 30s in terms of oil price, which we're seeing now. Secondly, the other low light we had was how we just saw Brazil fall apart more or less last year, and the outlook is not good, and that's serious for TOO because we have a very large portion of our balance sheet invested in Brazil, so we need to drive very carefully in that country as we continue to run our business there. But it's definitely challenging. And then, of course, the last point, which Peter talked about, which was accelerated at the end of the year, doesn't look much better today, is of course the TOO unit price, which ties back to how we have been looking at growing our business over the past years, because we've always taken it for granted that we would be able to just walk out or pick up the phone and ask Vince for more money. That's not going to be the case in 2016 either. So, what's new in 2016 is what Peter already talked about. We are introducing one scorecard for all of TOO, all of the functions involved here, and I personally think that's pretty exciting. That drives alignment. It creates a new communication platform, and I'll go through some of the elements here. It will be used in town halls as we move forward. It will be used by Chris and Hvid and Paul in their respective business units, and we'll all be using it to look how we fare throughout the year. But it really contains of 4 elements. It's safety. We have 4 rolled up goals that we by the end of the year will be measured on, and that will actually go into our TPF, Team Performance Factor, which is for all of TOO. And then underpinning that, we have a whole bunch of goals that we need to accomplish. But hopefully most of that links up to the 4 categories that's listed on top. We have 9 strategic goals that we have identified at this point, and there may become more throughout the year. And then we have a number of, you could say, more tactical goals, which I'll just touch on for each of the business units, and that the BU heads will present at a later point. If I turn to our first goal, which is really safety. There's always a lot of discussion about where does safety belong. Is it something that should be directly linked to incentive compensation or what? The board asked us this year, we had the discussion to make sure that we never compromise on our safety. This is the foundation, it is the overriding principle. We don't do anything without putting safety first. And it's critical that we do that. If we look at our performance in 2015, we had the best year ever in our shuttle tanker fleet, but only to wake up in the first week of January and have our first LTI in a very, very long time. That's distressing, of course. In the production fleet, we had more personnel injuries last year than we wanted to have. We had more hydrocarbon releases, and that's something that we launched a program on last year, and we really need to get after. And it's important. It's a safety journey. It never ends, and we just need to keep going on it as a leadership. We're living it every day. Right now, we are, as you are aware, we are running the Banff operation, and I'm just really pleased to see how the leadership always talks about that safety comes first. So even though everybody understands that, of course, it's important to get the unit up and running again, the question is always, is it safe to do it? Is the crew fatigued? We're having the right conversations and decide to call time out when it's time to call time out, as it happened last night. And I'm really pleased with that, and that is a responsibility that is on all of us, and it's very clear that is our number one priority for the company, and I want you to think about that also as we go into 2016. The second element that we talk about here are the 4 buckets that I've listed here, and they're the ones that are going to be rolled up, and some of them are quite easily quantified, and some of them represent new ambition that we have, or new initiatives that we've launched this year. The biggest bucket is really on the right-hand side, the business platform, and that is linking to our economic result. And we think that's relevant because, of course, there has to be a relevance in terms of how the company performs and what's in the bucket for us to share as performance bonuses. I think we all understand that. So that's a very significant portion of it. It's calibrated around the budgets that are signed off by the board. The second one we've listed up there with a smaller percentage, but we wanted to have it up, and that just shows how we are going to look at these scorecards going forward. It's very important that when we have a strategic initiative that needs additional oomph or push to make it happen, then we can put it up and make it a real and a broad company shared goal. We put the $30 million challenge up there. It obviously covers a lot of activities, but it really is to illustrate and demonstrate that this is really something we need to get behind as an organization. We need to take cost out of our business to stay relevant to our customers, and we need to do it so we can outcompete our competitors. That's important. The third element is something that you have all seen many times. We've talked about that through the years. It's the project execution. It's delivering on time and on budget. We have a number of projects that we delivered last year, and we have projects we're delivering this year, and we have a lot in the pipeline. So this is critically important that we do that well, and that we as an organization support that, because that is also another mission critical category. And then we have more of a soft category here, which we call organizational development. So what is it really we want to do with COO? And that's going to be one of those that we, I'm sure by the end of the year, will have more difficulty measuring it, whether we actually accomplished it or not. But in my words, it's about shared leadership. It's about really working for the whole of the company. It's being focused on solving the goals that we have as a company, addressing the issues that by the end of the day matters the most for how we perform as a company. And that is really how we collaborate across not only TOO and functional units within TOP, across TOO, but also in the broader TK sense. So that's you're going to see a lot more initiatives on that front in the coming year here. The third category that we talk about here are the key strategic TOO initiatives. And a way to think of that is that they are not the tactical initiatives that you typically would see under your goals, for example, delivering the Petrol 1 project or making sure that we have 90% commercial uptime. These goals are something that have either been triggered by the macro event that we're operating under right now. So, for example, access to capital that Peter talks about. That's going to be a major challenge for TOO's leadership in the coming year, figuring out, so how do we actually go out and access capital for anything that we want to pursue that goes both in terms of debt but also the equity capital, given that we won't be able to access the MLP equity market. And how do we stay relevant to the customers, right? And that's of course is important here, because if we can't raise capital, if we can't fund new projects, then obviously as such we are less relevant to our customers. Another way we can think about being relevant to our customers is how we develop our business models, what we're prepared to do. There is a goal up there around contract of affreightment and how we look at our service in the North Sea for the shuttle tankers. But we also need to have a discussion about how we can enter into new FPSO projects in new markets with new partners and still be relevant to the customers, maintain the know-how that we have as an organization, even though that there are some stoppages along the way here. So those are examples of some of the strategic goals we have. We put up here what I call more infrastructure goals. It's been raised many times in workshops here in Trondheim around project management and supply chain. We need to do better. So this is not about executing on the specific project or finalizing one specific negotiation, but that's putting in a better infrastructure, the people, the right education, the right tools, and really driving that. And we have a number of initiatives that we already kicked on that, but those are the factors that we compete on as an organization. So they're important that we constantly come back and put that on. And there are more there that we'll be talking about in the new year. The TOP goals and the fourth element that we have here is that for each of our business unit, ALP, TOL and TOP, we have a set of business goals. I won't go through them in detail because Chris will do that in a later town hall, but as you will quickly see, there are much more around the tactical goals that I think you're actually aware of all of them already. I mean, but those are the things that we need to deliver on in 2016. They are the ones that have a big impact on our P&L and how we are looked at in the external market when we deliver on that. So as you kind of have this flow of information here that's come in, new words and concepts and everything being introduced, one balance scorecard. How should you really think about it? And I think it boils down to a couple of key points. First of all, I think we all realize that due to the macro environment, new growth is temporarily on hold. But we need to look at how we can still stay relevant in 2018 when new projects would have to deliver. How do we position ourselves in an environment where we can do that? That requires some thinking. But for now, we will not be able to go out and raise capital in the traditional way, so therefore our focus needs to be on redeploying our existing assets and maximizing on the economy on what we've already invested in. So it's about driving cost leadership, being focused on efficiencies and on project delivery, as I talked about. It's being focused on safety and operations. And I think, very importantly, I think the signal that we're all trying to send here is that we are in this together. In the way that we are looking at this, we are introducing shared scorecards here. It's not about the individual performance. It's not about whether BD is doing better than F&A or vice versa. This is about how we perform as a company. And we need to figure out ways where we can do that better as a team. As Peter said, we rise and we fall as one TO and as one TK. And that's what we really want to work on and signal in 2016. And then by the end of the day, it's about increasing the relevance to our customers, which I was reminded about when we had a session in Vancouver last year where we had our 9th graders in, and I had a 9th grader that came into TK. We do it every year. It's like bring your son or daughter to work kind of day, and they follow you around. So we had lunch with them, and Peter comes in and addresses the crowd of 9th graders, and so he goes, so what's the purpose of a business? And I think all of us parents are thinking, what is Peter on to now? Is he going to talk about pivoting, or what is he introducing here? But it's the whole purpose of a business is obviously to develop a customer. And sometimes we forget about that whole basic concept of why we're here. And we won't be here if we don't have any customers. It's as simple as that. So when you think about what we do and how we communicate about our vision, which is bringing energy to the world with TK Spirit, it's about saying what we do and doing what we say. And if we just stick to some of those simple principles and we live those 5 goals up here and deliver in those areas, then eventually we will do well as a company, and we will be successful, and we will become profitable. So that's really what it boils down to. So with that, I would like to open for questions to all of us. Thank you.